The very best businesses are the ones that earn a high rate of return on tangible assets.
Warren Buffett is an expert with insights on economic storms with the top investment assets.
You can get all kinds of different figures, but there's probably at least $1 trillion.
In times of crisis such as trade wars, smart investment choices can make all the difference. He is one of the well-known personalities who knows when and where to invest. In this video, I will get into his tried and true strategies to invest in wealth and make the most of challenging times. Here are the 5 best investment assets that he suggests. Productive assets. When it comes to investing wisely, he suggests putting the money into productive assets like real estate, businesses that create goods or services, and even farmland. These types of investments can generate steady income and potential growth over time. Essentially, productive assets encompass various types of investments that have the potential to generate consistent income or appreciate over time. This approach reflects Warren Buffett's astute understanding that, in uncertain economic times, allocating resources to projects that can produce real value is a smart move. One avenue that falls under the productive asset umbrella is real estate. Owning properties, whether residential or commercial, can offer multiple benefits. Successful businesses can enjoy consistent earnings and even expansion, translating to greater returns for investors. And being part of a business means participating in its growth journey and potentially benefiting from its successes. Investing in productive assets boils down to nurturing 2 key aspects: your growth and the growth of your investment portfolio. His emphasis on investing in yourself highlights the importance of continuous learning and personal development. Equipping yourself with knowledge, skills, and a growth mindset enhances your ability to make informed financial decisions and adapt to changing circumstances. Simultaneously, investing in your portfolio underscores the significance of diversification. You reduce risk and create a balanced investment mix by allocating funds across various productive assets. Diversification helps insulate your portfolio from the volatility of individual assets, as different assets tend to respond differently to market fluctuations. Embracing the concept of productive assets aligns with Warren Buffett's philosophy of smart, strategic investing. Real estate and businesses offer opportunities for income, growth, and resilience in the face of economic uncertainty. Businesses that produce goods or services. Warren Buffett's investment wisdom extends to another area of wealth creation: businesses that produce goods or offer services. This approach involves investing in companies, manufacturing products, or delivering valuable consumer services. By owning a share of these businesses, you become part of their journey and can benefit from their successes over time. His philosophy aligns with the idea that investing in well-run businesses can yield substantial returns.
These people had one thing in common.
He famously stated, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." This encapsulates his belief in the importance of the quality and potential of the business itself. When you invest in a business that excels in its field, has a strong market presence, and can adapt to changing trends, you position yourself for long-term growth. Moreover, investing in businesses has several advantages. First and foremost, it allows you to participate in the profits generated by the company. As the business prospers and expands, its earnings may increase, leading to higher investor returns. Based on this, many companies pay dividends to shareholders, providing a steady income stream. Businesses that produce goods often have the potential to establish strong brand loyalty, which can translate into consistent customer demand and revenue. Think of companies like Apple, known for its innovative products, or Coca-Cola, renowned for its timeless beverages. These businesses have built a reputation that drives consumer loyalty and sustains their market position. Service-oriented companies, such as those in the technology, healthcare, or financial sectors, cater to various needs of consumers and businesses. Their success often hinges on their ability to provide efficient, reliable, and innovative solutions. As these companies grow, their services may become increasingly essential, leading to higher demand and revenues. Investing in farmland. Have you ever thought about owning a piece of land that can grow not just crops, but also your wealth? Warren Buffett suggests that investing in farmland can be a smart move. Imagine being part of an industry that produces essential resources while potentially reaping financial rewards. When you invest in such an asset, you're essentially investing in the potential of the land to generate income through agricultural activities. His wisdom comes into play here as he recognizes the enduring value of resources in high demand. Think about it. As the world's population grows, the need for food and resources will also rise.
We'll draw maybe a couple of lessons from them.
This places farmlands in a unique position. It's not only an asset that can be appreciated over time, but also a contributor to global sustenance. Buffett's famous words, "Price is what you pay, value is what you get," is the best example of such an investment. The value of this asset extends beyond its price tag. It includes its potential to produce crops that fuel industries, nourish families, and provide you with a steady income stream. Investing in such an asset aligns with Buffett's principle of seeking out assets with intrinsic value and potential long-term gains. Moreover, farmland investment can act as a hedge against inflation. As the cost of living rises, so does the value of agricultural products. This can help your investment keep pace with inflation, preserving your purchasing power. But how does one get started with this investment? It's crucial to do your homework. Understand the quality of the land, the types of crops it can yield, and the potential risks involved. Additionally, such an investment offers a tangible connection to the earth. It's an opportunity to contribute to sustainable agriculture while reaping financial benefits. While not all of us can be expert farmers, investing in such an asset allows you to be a part of something fundamental and essential. Overall, it's like sowing the seeds of your financial future. Blue chip stocks. You can be a part owner of companies that have stood the test of time, weathered economic storms, and maintained their position as industry leaders. Warren Buffett advises that investing in blue chip stocks is one way to achieve this. These are the stalwarts of the stock market, representing some of the most well-established and reputable companies. Blue chip stocks are like the seasoned veterans of the investing world. They're typically large, well-established companies with a history of stable performance and a strong market presence. Think of household names like Coca-Cola, Microsoft, and Procter & Gamble. These companies have proven themselves over the years, and their stock prices often reflect a sense of stability. So, what's the importance of blue chip stocks? For one, they often pay dividends, a portion of the company's earnings distributed to shareholders. Dividends can provide a consistent income stream even during market volatility. This aligns with his emphasis on investing in companies that generate cash flow and provide ongoing returns. Moreover, blue chip stocks tend to be less susceptible to dramatic market swings. Their well-established status and broad market recognition can offer security during uncertain times. This resonates with the advice to invest in companies you understand and believe in for the long haul. Buffett's strategy of value investing, seeking stocks that are undervalued relative to their intrinsic worth, is also relevant when considering blue chip stocks. While these stocks might not always be trading at bargain prices, their consistent performance and potential for gradual growth can align with his principles. It's important to note that investing in blue chip stocks isn't a guaranteed ticket to riches. Like any investment, it comes with risks and requires careful consideration. Even the most established companies can face challenges, shifts in the industry landscape, or economic downturns. Therefore, diversification, investing in various assets to spread risk, remains a key element of a well-rounded investment strategy. So, investing in blue chip stocks is like aligning with the veterans of the stock market. It's about placing your trust in companies that have proven their resilience and ability to navigate market challenges. Just as Buffett seeks out companies with strong fundamentals and enduring value, blue chip stocks can offer investors a solid foundation for building wealth over time. Dividend stocks? Did you know that you can receive a little financial gift from your investments regularly, almost like a bonus for being a shareholder? That's the magic of dividend stocks, a concept that Warren Buffett has endorsed as a way to let your investments work for you. Dividend stocks are like the friendly neighbor who brings you cookies every once in a while. When you own shares of a company that pays dividends, you're entitled to a portion of its profits. These dividends are usually paid out regularly, like quarterly or annually. It's like a company sharing its success with its shareholders. So why would a company choose to share its profits this way? Well, it's a sign of financial strength and stability. Companies that consistently pay dividends often have a steady stream of earnings. This stability can reassure investors, suggesting the company is well-positioned to weather economic ups and downs. His approach to investing emphasizes the long game, and dividend stocks align nicely with this philosophy. When a company pays dividends, it's not just a one-time thing. It's an ongoing commitment to share its profits with you. This aligns with Buffett's advice to focus on the long-term potential of your investments rather than getting caught up in short-term market fluctuations. Moreover, dividend stocks can be especially appealing for those seeking a steady income stream. If you're looking to supplement your regular income, dividends can provide a reliable source of cash flow. This can be particularly beneficial during retirement or when aiming to achieve financial independence. However, it's important to note that not all companies pay dividends, and that's okay. Some companies may choose to reinvest their profits back into the business to fuel growth and expansion. This can lead to capital appreciation, where the value of your investment increases over time. When considering dividend stocks, it's also wise to look at the dividend yield. This is the percentage of the stock's price that the company pays in dividends annually. A higher dividend yield can indicate a more generous payout, but balancing that with other factors like the company's stability and growth potential is important. So, whether you're dreaming of that extra income or aiming to build wealth steadily, exploring dividend stocks might be a valuable step on your investing journey. So, remember that investing is a journey, and learning from the likes of Warren Buffett can provide valuable insights. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. If you found this video of 5 useful assets helpful, give it a thumbs up and consider subscribing to my channel for more investment wisdom. Sharing is caring, so feel free to spread the word if you think others could benefit from this information.